Today I want to talk about rent inflation. So I came across this article in Bloomberg. It reads, US rent inflation is slowing fast in new index built by Fed team. The cool down in US housing should show up in official inflation data next year, according to a new index that aims to capture changes in rental markets without the usual lag. So this article was written in December, late December 2022. So when they talk about next year, they're talking about the 2023, all right? Researchers at the Federal Reserve Bank of Cleveland and the Bureau of Labor Statistics built a gauge that's based only on the leases of tenants who recently moved in and compared it with another that measures the average of rent for all tenants. Look at this chart right here, right? So this chart basically, what you're seeing right now is you see the black bar so it says, so it's new tenant repeat rent index. So as you can see here in this graph, basically rent peaked in June of 2022 and now is heading in the opposite direction. So rent inflation is actually going down. This is year over year. Okay, so you might be in one region, you're saying, well, that's not true because rent in my neighborhood and rent in my area is going up, or and so on and so forth. So what this is looking at is on average across the country as a whole, where is rent inflation heading? So this is showing rent is heading downward and not up. This information, as far as new leases, it does not show up in the Fed CPI report. So we just got a CPI report in January on the 12th. All right, so let's take a look, see what's in it. Looking at this CPI report, we see that used car sales is down negative 8%, but I've highlighted the area where it shows here shelter, rent of primary residences, and owner equivalent rent of residences. So basically shelter, so housing and so on and so forth. So the Federal Reserve right now is showing that it's 7.5% higher year over year. Right, so rent of primary residences, 8.3%. So people who are moving to the first apartment, who are signing leases, based on the CPI report and the data the Fed is looking at, they're saying that's up 8.3%. Also, owner's equivalent rent of residences, 7.5. Owner's equivalent rent of residences, that's always been a strange one for me. Because basically what that is just saying, hey, let's say you own your house. Basically what that says is how much do you think that you can rent your house for if you were to move out? The Fed takes also that into account as well. Housing, rent, and rent inflation accounts for about 30% of CPI and 40% of core inflation CPIs. So the Fed put a huge weight on this information here in order for them to see where inflation is going, also to see whether they should raise interest rates, start to cut rates, and so on and so forth. So they want to see this number come down. So they want to see price of housing come down, and they also want to see rent come down. Even though that is happening, it's not shown up on this data just yet because of the lag. Now, here's another aspect, is something I want to talk about. So if we're seeing that rent inflation is coming down and that rents are coming down, how is that going to affect cap rate? How is that going to affect housing? Because think about it. I'm not going to buy a rental property at a certain price if I can't get that rent. This trend here is also going to reflect in the price of housing, not only just because the interest rates are going up, but also rents are starting to come down. So that has to reflect on the price of housing as well. Check out this article from Forbes magazine. It says, what does a white collar recession look like in 2023? Which industries are on shaky ground? A recession has economic risks, including high interest rates, political instability, and high inflation. In past recessions, blue-collar workers tend to get hit hardest by tight economic times. However, many predict that white-collar workers will feel the strain of economic downturn in the upcoming recession more acutely. This is because white-collar jobs are easier to downsize now than in the past. A major component of white-collar recession is that technology has improved to the point where it's allowing for the replacement of various jobs. We are seeing this more in white-collar jobs than blue-collar ones right now. A key technological advance impacting this is AI, artificial intelligence. AI is starting to automate things from content creation to financial advice and more, allowing companies to cut costs by relying on AI instead of large staff rosters. So we're seeing that across the board, right? So Twitter just laid off 50% of their staff. Facebook is laying off individuals. Google just announced that they're about to lay off 12,000 people. Amazon just laid off about 15 to 20,000 people. So we're seeing this right now, okay, in tech. And it's only January. What is this going to look like in June, July? Okay, so if I'm a landlord and a lot of my tenants are in tech and they have these sort of jobs, I don't know, I would be worried, to be honest with you. I think I would, if I'm an investor, if I'm a landlord, I want to, keep some cash on the side, right? In a situation like this where there's a lot of uncertainty, cash is king, right? So keep some reserves of cash on the side. Don't over leverage yourself. So when all this is happening as well, as we get deeper into this recession, people are going to travel less, they're going to spend less money. And you have a lot of people who bought properties in Airbnb or people who are doing short-term rentals. I believe that a lot of those housing stocks are also going to hit the market, as a lot of these investors, either they're going to try to get rid of their Airbnb by selling, so they're going to add more inventory to the market, or that they're going to try to rent it, right? So if I'm an investor, if I try to sell my property, I can't sell it, I'm going to rent it. Now, what happens when everyone's trying to rent their property, right? So let's say you have 10, 15, 20, or whatever, 100 Airbnbs, they all try to sell, right? So then that's competition right there. They're adding too much into the market. And then they all turn around and say, well, we're not going to rent, we're not going to sell because I can't sell for whatever, because interest rates are high and so on and so forth. Let me rent. There will be a competition with renters. So if there's more rental housing on the market, supply and demand, that means rent is gonna basically go down, right? Because if you're an investor, I would rather rent for less. I'd rather get something than get nothing. So now you get a competition, downward rental units, right? So which is gonna be good for inflation, which also gonna present really good buying opportunities as well. What do you guys think? What do you think is going to happen? What do you think is going on with this? Leave a comment. Please subscribe to my channel. Give me a thumbs up. Thank you.